Good morning, all. Ira Epstein with your metal market wrap-up, and normally I do this earlier in the weekend, but this is your weekend update. It is Sunday, about 7:20 p.m. Central Time. Why not? We've got the markets open, a lot more to talk about than giving it at the beginning. What we're getting early on is obviously a rally in the stock market. We've gotten these before, where you get an early rally, you come in the morning, and then it fades. We'll see if that's going to be the case. We're getting more of a rally on the energies. The grain markets are getting a little bit of a bump. Bonds and notes rallied a lot on Friday, but they're giving back a chunk of that tonight. The gold market's struggling with a dollar gain, not going anywhere. Copper market already has about a 500-point range. That's rather rich that early in the evening. And the dollar index up $6 still looks to me like it's in an uptrend. So what's going on? Well, you know that we're looking at a huge break that's occurred in the stock market. We had option expiration on a lot of different financial vehicles on Friday. It's out of the way now. So what traders are able to do, they're taking a sigh of relief, is they get set for what? The FOMC meeting this week, Bank of Canada's meeting. We get a lot of earnings that are going to start coming out now. We'll see how good these companies did in the stock market. And of course, the inflation story is going to be there. Then we have the Ukraine still going on, and it appears that Russia's still moving along with all its war exercises. There's a crazy movement I saw between the United States, South Korea, and Iran. The U.S. ordered South Korea to unfreeze some money that under sanctions it was South Korea held, it was Iranian money, and pay a UN bill so that Iran can vote in the UN. You think with all the oil that is being bought by China from Iran, Iran can't pay its own bills? I think our administration doesn't know what they're doing. The second thing is, now they put out tonight, I'm reading, there could be no further real negotiations without 4 hostages that Iran has been holding for God knows how long released. So are those events going to get us to enter a nuclear talks again when Iran is on the doorstep of its nuclear weapon? Why don't we give them another $100 billion as well to pay them not to do some terrorism, which they'll do down the road as well? I mean, that's just what I think. I think our administration has lost its way. Then we have the Ukrainian situation, and tonight the State Department is ordering the families of those in Kyiv to leave. The embassy's staying open. The administrators will stay there. The families have to leave. So they're getting ready at this point for whatever's going to happen, and that makes a heck of a lot of sense. You don't need the families put in harm's way. But what makes you think that smart people wouldn't have set their families off already? They're ordering it out, but I wonder how many are there. Okay, in the gold chart, you are stuck. If you don't see this, open your eyes. On a monthly chart, you're just hanging at this 18-month moving average caught in Bollinger Bands. Momentum's trying to point up. The trend is up. Higher lows, certainly higher highs. You're over the 18-week average. What would break the trend on a monthly basis is getting under 1750, 390. So the very long-term traders have the go-ahead here, and they've had it for a while, that they like the long side. They're looking for the 1950 area. I've given a longer-term projection that if inflation grabs hold, as it has been, and stays grabbing hold, which I don't know that it'll do, many think it will, and if gold will pay attention to inflation and be able to fight off, there's an awful lot here you have to get through, fight off a series of interest rate hikes, what would that mean for gold? And it could be the upper Bollinger Band. Got it out. When we look at a weekly close-only chart, the bias is up as you're over the 18-week average of closes. When we go to a weekly bar chart, this is how it looks. But once you put the swing line on, you get to see that you do have a pattern of higher lows and higher highs. Swing lines I teach in my charting course, and what it is the current bar looks back at the bar before it. Now that bar can be a weekly chart, a monthly chart, a daily chart, a 15-minute chart, whatever it is. And there's 5 rules that determine if the line is drawn to the upside or the downside. What I'm trying to look at is a way to find a trend with the concept of higher lows, higher highs that is not subjective. I want it to be numeric at the end of the day. And therefore, that's what this is doing. It's putting it together under the way that I created the indicator. The indicator is automatic. It takes off. And until you take out 1789.30 on a weekly chart, not that far away from the monthly number, the market is in an uptrend. It is over the 18-week in red, the 100-week. The 200-week is way under the market, not to worry about that. It could get a bullish crossover if the 18-week were to get over the 100. That would do something else. You would then have a classic bullish setup with the shortest term average, the 18 over the 100 and the 100 over the 200. That'd be bullish. The objective on the first run, if it occurred and if the market continued going up, 1864.70. The slow stochastics are up. So in summation, the bias is up. The trend is up. You have the potential, if you had a good gain this week in the gold, to get a bullish crossover, putting into play the 1864.70 level. By the way, what would destroy the market? Getting back under 1789.30. Then everything I just said off the table. The gold-silver ratio is now favoring on the weekly basis as well. Silver gaining on gold. The lower the numbers go, the less silver you'd have to give in a perfect world to get an ounce of gold. When you look at silver, you see the uptrend, higher lows, higher highs. I look for the pros to be buyers right in here at 23.42. However, that's an awful rich buy. Why? If you buy it and you're not wrong until 22.20. That risk puts you into $1.20. That's $6,000 on a full-size futures contract. For a guy like me, that's way too much risk. The upside target, 25.26. Doesn't mean you're not in an uptrend. In the copper market, you have a pattern of a lower low, a higher high. Now, I don't look for copper to just pick up and run right now. You'll say, why, Ira? And I'll answer it. Hi, Ira. Lunar holiday starts this coming week. So factory orders that had to buy copper wanted a stockpile, whatever they want to do, probably done. So China, not going to buy that much copper. It makes, to me, a heck of a lot of sense. They'll be gone for their lunar holiday week. The market won't be doing an awful lot while that goes on. Platinum joins the bull parade with higher lows, higher highs, bullish support. Look at this. You had a crossover where the 18 just got over the 100. You see that right through here. Came down. Watch these two numbers. Okay, kissed. Now it's turning back up. The kiss means it's skidded against it, coming right on up, putting into play, if we can get a rally, 1090 objective, risk on the trade back to 924. And, dollar index. Well, the dollar index tonight up a little bit. The market fell all the way back from up here into a downtrend on the swing line. However, you always filter the swing line with where the bias of the market is. When the market's over the 18-week average, the bias is up. So even though the trend of the swing line is down, the two fight each other. And the most I look for on that break is to get back to the 18-week average to find support. Then the game starts fresh. And that's where you're at, looking for this market to first negate that downtrend, which it hasn't yet done. Momentum flattening out, bias up, trend down, objective hit, a difficult one on the weekly chart to figure out. Now, as you know, one of my favorite tools that I like to work with are enhanced Bollinger Bands. But before I take you there, I want to remind you, I'm going to hold a live webinar this coming Thursday. If you want to pre-register early, just move your cursor, get up to the top there, and you probably can do that. I'm Ira Epstein. You have a good day. I will talk to you all come tomorrow morning. Take a look at the Enhanced Bollinger Band course. Welcome. I'm Ira Epstein, and I'm here to talk about my Enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.